Son. Okay, I think we are already live. 1 second. Son. Yeah, we're live. Hello, everyone. Hello, chat. Please let us know if the sound is all right. Let us know in the comments if everything works smoothly, if the audio and also the camera, the quality is all right. That's always the number one most important thing. And yeah, today I have a special guest. Yesterday I made a video about airdrops, and you guys are also doing one that people can already claim. We'll talk about this today, but we'll also go really, really deep on synthetic assets, and that's a really, really exciting field. I just had Sunny on. We talked about the ionized proposal, how it differentiates the mint and burn model to the CDP model. A lot of different and exciting concepts. And today I will have a good conversation with Siddharth from Comdex, who is tuning in live from Bangalore in India. Thanks for doing this. Siddharth, how is everything going?
Hey, I'm doing great. Thanks for having me. Hope you're doing well as well.
Yeah, I'm doing extremely well. As you can see, maybe I get a little tan here. So
The Mexican sun.
the Mexican sun, exactly. Yeah, it's really, really beautiful here. But yeah, we just talked a little bit about it because actually in 2013, when I still was a pleb, not knowing anything about crypto, I was living in India actually for a while, and unfortunately haven't made it back since then. But I was living there for like half a year or something, and I also talked with the persistence guys and P-Stake guys, and we'll get into all the connections and all this. But first of all, I think we can start with sharing a little bit of how you got into Cosmos. How is the Indian community, the Indian cosmonauts doing? Are there many of them? How is it? Are there frequent events going on? Maybe you can give a little bit of insights on the local community in India of cosmonauts and how you got in.
Sure. I'll start with how we got into Cosmos to begin with. So, when we launched Comdex back in 2018, or when we started building Comdex, which was back in 2018, we always sort of had the vision of being a proof of stake based chain where, that's where we saw the future of the industry to be. So at the time, Cosmos SDK was, the state of the art, or Tendermint was the state of the art proof of stake chain that you could, build using. So at the time in 2018, 2019, when we started building Comdex, it was at that time that we chose Cosmos as an ecosystem, to make our sort of footing in. And then over the last 2 years of building and using Cosmos and then being part of this ecosystem, obviously it's been a great journey. Great support from the ecosystem, all the other founders around as well. Speaking of the Indian ecosystem itself, I think the last couple of years has been tremendous towards seeing growth in the Indian crypto ecosystem as a whole. Way more people now talk about crypto in general on the day-to-day than they were maybe 2 or 3 years ago. There was a sort of uptrend, I would say, in the kind of events that were happening. There were a lot of hackathons and major events organized where you see attendance from young developers in the Indian community. But then I think COVID had a bit of a role to play in having the events go down. There's still a lot of digital events that I know that keep going on from time to time. But there's surely a now sort of thriving developer community in India, especially the last year alone with the kind of popularity some layer ones have seen. Especially, I think Cosmos has a long way to go still in building a footing in India. But I surely think projects like Persistence, how well P-Stake is doing, and then what we're doing at Comdex, we kind of trying to play our own role, at least on the ground here, to spread the gospel, and then trying to also get more and more young builders and founders to come into the ecosystem and build here as well.
That's awesome, yeah, and I hope when I come back, maybe we can do some meetups there and get the cosmonauts together. How is actually, so whenever you hear about crypto in India, you always hear horror scenarios that the Indian government, they don't like crypto, they ban it, they hate it, they don't want the country to take part in that, they think it's a scam. So is it real? So how does the Indian government or institutions, entrepreneurs, how do they see crypto really? Maybe you can share some insights there.
I think it's at a very interesting spot right now. I think there are a few people who have been familiar with crypto for maybe 2 or more years who don't have this fear anymore of when it
Yeah.
comes to regulatory things, because they've sort of seen the cycles and they understand the general behavior of the industry. There are a few newer folks who've sort of jumped onto the industry in the last 2 years or so, and typically these are the guys you see who sort of have some sort of fear of uncertainty when it comes to regulations and how things will be handled. But at the same time, I think broadly the adoption for crypto is definitely going up. Yeah, I mean, cricket is a huge sport in India. It's one of the most widely watched sports, statistics wise, in the world as well. And it's crazy now in the last I mean, at least the last year alone, so many of the cricket matches that India plays, or has Indian teams playing, the commercials always have like crypto exchange ads running through them. So it's sort of becoming like a very accepted thing, or very sort of open thing, that people invest in crypto. Crypto is something you can invest in, and it's always sold as something that people can invest and then make a fortune off of, because you're investing in hopefully the right asset. So that way, I think the social acceptance in India for crypto is definitely changing now, because when you start seeing commercials on TV in between cricket matches, that's when Indians are on board with whatever crypto is all about.
Yeah, it's interesting. I think in the rest of the world, um, most people think that this would never happen because you read article on article where the Indian government just bans and cracks down on cryptocurrencies. And I think there was one phase where it was even like illegal to hold cryptocurrencies or something like that, or the banks would have to, I don't know, shut down your accounts if you trade with cryptocurrencies. But yeah, I think globally we're seeing that we're getting this, like I said, more social kind of like adoption, and people are kind of like getting behind a little bit that crypto is much more than just trading those ticker symbols, right? So there's a whole new industry that's being built. And yeah, I think you guys are playing a major role in that, especially in the Cosmos ecosystem, as also being one of the first ones to kind of like adopt the technology, implement IBC, right? I think XPRT was one of the first coins that implemented IBC. So that would probably go down in history once we hit 1,000, 10,000, 100,000, a million blockchains that have IBC. So can you share a little bit about how, I think a lot of people, including myself, sometimes we're a little bit puzzled, like what's the connections between all these projects? Persistence, as I think, is kind of like this parent project, and then you have P-Stake under it, and you had Comdex under it, which you said already originated in 2018. That was even, I guess, before Persistence. And then you also have the Asset Mental. So maybe you can share a little bit about kind of like how you guys operate, how you guys are structured, and how it's all linked together, all these projects in the Persistence ecosystem.
Sure. So, as I said, Comdex started off in 2018. At the time, the solution we were chasing was to create a platform that SME, MSME commodity traders in traditional commodities industry can use to trade commodities on chain. And the idea of this platform was to create NFTs that track real world assets. And then the exchange of those NFTs on chain creates a transparent environment that financial institutions have more sort of access to the information to. And that helps the financing in the whole ecosystem when financiers are able to access that information transparently. So this was an app we were building out in 2018, and we sort of had the vision to launch it as a coin, or as a independent blockchain of itself with its own token that runs the economy. But 2017, 2018 was a very different time when it came to crypto acceptance by institutions, because most of the people using the Comdex app at the time would be institutions rather than your average crypto investors, or average crypto users. So with institutions not willing to adopt to such a technology so early in the cycle back in 2018, we realized that what we need to make of Comdex is the application, or the interface that enables commodity traders to do their actions on chain, which is to track the ownership of the assets and exchange these assets on chain. But at the same time, we realized that the chain that's been built is a chain in itself that can serve multiple purposes outside of just running the Comdex application, because that was an enterprise grade a chain that's capable of tokenizing real world assets and maintaining a ledger of its ownership on chain. And the understanding at that point was, this is something of value that can be applied across multiple places. It shouldn't be restricted to the commodity industry alone, and shouldn't be restricted to Comdex as an app alone. So at that time is when the development teams, of Comdex and the chain at that time decided that the chain in itself, which is now persistence, is a chain which contains modules that can be used to spin up multiple applications like Comdex, and that's how persistence happened. And now with Comdex, the enterprise app that we built still exists. It's currently seen over $150 million worth of trade workflows, volume flow through it. We've done integrations with Western Union for payments. We've done integration with Wallex, which is another payment service provider in Singapore. We've done integrations with Refinitiv for KYC AMLs. So the application is running now, and it still uses the same modules which make up Persistence SDK today. But what we're doing going forward now is to tackle the same problem that we started off with, which is to solve the financing problem in this industry. We want to create multiple solutions that are able to tap into liquidity from different ecosystems and create sort of a seamless exchange of this liquidity across ecosystems. So in order to do that, now Comdex has created its own sovereign chain, which contains these modules for CDP, for creation of synthetic assets, and having an AMM where these assets can be exchanged with one another. So this chain will now support sort of interoperably multiple applications like ShiftFi, where debt can be financed, where like Comdex synthetic apps, where crypto traders can take exposure in gold, silver, crude oil. The enterprise trading app is still on the persistence chain, but will soon be migrated onto this chain so that it's able to interoperably work with all of these solutions that we have. So in terms of that, in terms of this journey, the persistence team or the persistence core dev team has been involved with building the first product that Comdex built, which was the enterprise trading application. So both our dev teams have worked very closely throughout that journey. And then even in the persistence journey itself, in the early months of persistence launching, the teams had a lot of communication on a regular basis and a lot of support going both ways. Even till this date, we have a lot of channels of communications between both the development teams. Tushar, Abhishek, and I, we often have discussions just to strategize and ideate for going forward for the ecosystem as a whole. And then, within persistence now, they have multiple sort of operations running. They have P-Stake, which runs separately. They have Asset Mantle, which is now running, and they also have Audit.one, which is the validator arm. So within the persistence ecosystem, where we fit in is, we sort of have this chain which supports the creation of these financial applications like ShipFi, like the Synthetics app, and other applications in the future, which will solve the problems of traditional finance using DeFi.
And you also mentioned that in the beginning, institutions were interested in such product, but it was probably just a bit too early for them. So can you talk a little bit about the current stage? Has that changed? Are you still in the talks with the same institutions, or have you even expanded to more potential users? Or are you completely shifted now and you say, hey, we rather target retail because there's also huge product market fit? What is the kind of like I guess user acquisition strategy and idea here with Comdex?
So in terms of the user acquisition strategy, we're kind of going for both. With the Synthetics app, it's kind of like an app that a DeFi investor would want to use to take exposure in other assets. Whereas an app like ShipFi is the kind of app that an institutional player in the finance world today would want to use to tokenize their assets so that they can raise capital from DeFi investors. So that's kind of how we're doing it. But speaking in terms of the institutional side and their approach or their sort of openness to adopting crypto as a technology, when it comes to ShipFi itself, right now we're in the process of doing our own sort of proof of concept with a fund in North America. I can't disclose the name or details much about what this is, but we'll soon be disclosing this. But what we're essentially doing is working a structure where this fund is able to accept LP subscriptions in stable coins instead of fiat, which they traditionally always do. That's sort of a big first step in being able to achieve an application like ShipFi, because a fund accepting LP subscriptions in stablecoin, using that operations for on-chain mining of Bitcoin, is also creating a yield that's something you can trace on the chain itself. So that's sort of is a signal about how financial institutions today are way more open. If a fund is open to accept LP interest in the form of stablecoins, then it's sort of a sign that going forward as well, we can see institutions take this route when it comes to accessing liquidity. And then when it comes to the users of the enterprise trade application itself, when we built our payment settlement module with integrations with Western Union, we found that initially there was a sort of hesitation towards understanding and applying the tech, but this was 2018 and 2019. Whereas now, with a greater understanding of how crypto works in general and how certain things about blockchain secure the technology so much and secure transactions that happen, I think there's a growing sort of openness towards it. We've seen it among some of the users that use the enterprise application, where they themselves have often discussed with us openness to settling trades using stablecoins. But yeah, I think that's something in a little far in the future for us to implement, at least on the enterprise front. ShipFi is sort of the immediate focus to get the liquidity flowing across the two realms of finance.
So I think we should maybe step a little bit back here and cover a bit of the basics here, because I think a lot of people are, one, new to Cosmos, and two, also new to synthetic asset marketplaces, right? I mean, we've been talking about this now for months, and it feels like years, but for some people that are new to crypto, this is they're completely puzzled right now. So I'll try to explain a little bit of the basics, and then you can take over and jump in and correct me also if I say anything that's wrong. But in short, I think the real innovation of synthetic assets in the crypto space is that you can basically bridge anything that's being traded in traditional finance, right? Maybe gold or stocks or other commodities, and you can bring them into the crypto ecosystem, and in Comdex case, into the Cosmos ecosystem, which means you have interoperable, fast finality, low fees, right? All these great features that we love about Cosmos, and you can trade these assets there. And on top of that, you also can deploy different yield strategies, right? Because crypto is just there to enable that, and it's 24/7, it's around the clock. So this is very interesting for institutions to offer to their clients a faster, better, more accessible, around the clock way to invest and to increase their investments, right? And I think there's also two main categories that you can differentiate. One of them being this classic collateralized depositions, which is what you guys are doing at Comdex. And then the other category would be this mint and burn model, right? Which is something that also I think Terra has pioneered a lot. And now we're seeing the ionized proposal. I talked about this extensively with Sunny. And now we have also a Silk coming up in the secret ecosystem. So can you share your thoughts, and maybe also, I don't know if that was helpful, this explanation, from your views, why synthetic assets are such a revolution in the crypto space, and also then go a little bit deeper into how Comdex is structured, go deeper on the CDP model, and what makes you guys so unique in that field.
For sure. I mean, from the synthetics perspective, I think I saw the video as well with Sunny a couple of days ago for the ionized proposals. He did a great job of explaining what they are. Talking a bit about how synthetics are going to revolutionize finance, or why it helps revolutionize finance. I think the way to think about it is looking at both sides of the coin. So let's for a minute look at how it benefits investors to have synthetics. So, firstly, it's giving me access to a whole range of asset classes that I traditionally don't have access to, because I choose to be, let's say if I choose to be an investor who wants to remain, decentralized, and I hold Atom and other assets within the Cosmos ecosystem, but I'm looking to take exposure in commodities like gold, silver, crude oil, or looking to take exposure in equities like Twitter or, Netflix or Amazon or Microsoft. I would have to go a very long route to convert crypto into fiat, to create all my licenses, complete KYC, open the bank account, and then be able to trade, Twitter, Microsoft, or whatever. So the idea is that in many ways, you destroy all the barriers that exist between you and an asset by just creating a representation of that asset, which holds the same value by being pegged in value. So it's sort of, from an investor's perspective, it's opening up your access. It's allowing you to have 24/7, markets, seamless flow of liquidity between different asset classes. From an investor's perspective, it's also like, speaking in the perspective of commodities alone, for example, if I'm someone who holds a certain amount of gold, or who wants to hedge my exposure to gold by taking opposite exposure, hedging in the real world tends to be very tricky with derivatives, because derivatives come in the form of contracts in the real world, which have expiry. And then upon expiry, there's the whole process of rollover, which can cost money. And commodities, when it comes to something like commodities in the real world, when I say taking exposure to, let's say, wheat, it means me literally owning physically certain amounts of wheat, which is stored in a warehouse somewhere where I own the ownership of that wheat. What that means is that, indirectly, any damage to that wheat affects directly the value of my holding. And it puts me at the risk and costs of that are associated with physical storage, and risks that can come from damage in physical storage. So there's a lot of nuances to different industries and different assets and ownership of different assets. What synthetics does is it kind of strips away the nuances of ownership of any asset and just makes it easy to own an asset by being able to represent an asset in its pure value terms and nothing else. So that's how I think the whole concept of synthetics is able to revolutionize how investing happens and how exposure in different asset classes happen, or how portfolios can be built. Um, I think speaking a bit more about the mechanism, which you pointed out. So, as you rightly said, you can sort of look at it as a spectrum where at the one end you have the CDP model, which is a fully collateral backed synthetic. And at the other end, you have something like what Terra does with the Luna UST mint and burn relationship, which is called seigniorage. So, yeah, I mean, more or less, I think every synthetic broadly can be categorized into two categories, which is algorithmic and collateralized. So, thinking about it in sort of the decentralized realm, Terra has done a fantastic job with UST, and the way it's able to do it is have great adoption for UST across multiple apps within the Terra ecosystem, which in turn creates demand for Luna, which is used to mint, which is burned to mint UST, and vice versa. If you look at something like MakerDAO, the way it works is, you take an asset like an Ethereum, you lock it in a vault as collateral, and then you're able to mint stable coins like DAI against that collateral, so long as your collateral is able to maintain a certain ratio in value against the debt that you borrow against it. So what we at Comdex, or what we wanted to do sort of, in our approach of synthetics, is to have collateral backed synthetics, because generally we think of that as, the safest model to go around having a synthetics protocol. Because when you have a CDP or collateral backed position for a for a synthetic asset, the collateral that you have backing the asset is over collateralized, right? Which means you typically post way more collateral. You post a higher amount of collateral than you borrow in debt, because if there is ever volatility in the market of the collateral asset, that would affect the prices and the value of the collateral that you've posted, and it should always be able to absorb or be insolvent for the debt that you've created against it. So, we sort of realized that when you look at MakerDAO today and you look at the DAI, if you look at the total collateral that backs the DAI, a large chunk of it, I think more than 60% of it, is USDC. So although MakerDAO is a decentralized stablecoin, a large chunk of its collateral backing it is a centralized stablecoin like USDC, which we felt is kind of something you can truly address with the power of IBC. Because instead of having all our synthetic assets, backed by one or let's say two assets, like in SNX, it's Ethereum and the SNX token itself. We wanted to have an IBC-enabled synthetics protocol where multiple Cosmos ecosystem assets can be used as collateral to mint synthetic assets. What that means essentially is, for all the gold or for all the silver or for all the corn, crude oil, or wheat that exists on the Comdex protocol, not only is there collateral backing it, but a diverse set of collaterals, which means that if there is ever volatility in the collateral markets, it has a lesser impact on the synthetic asset set. Because at any given point, let's say we have a huge fluctuation in, I don't know, let's say the DVPN market. The DVPN backing for gold might only be 20% of the total collateral. So only 20% of the debt is at risk when DVPN goes volatile, rather than having a large chunk of the collateralization be just one asset alone causing volatility. So that's one way we've approached it, where having an IBC-enabled synthetics protocol spreads the risk of the collateral by having multiple different volatile assets be the collateral for it. And then even the debt that's minted is typically in the form of commodities, which is gold, silver, and these commodities in the long run have very stable pricing, which tends to show an upward sort of momentum, being able to beat inflation in the long run. So for a crypto investor or for a DeFi investor in the Cosmos ecosystem, you could be holding bags of different Cosmos coins. You could collateralize them and mint debt in the form of gold, where you simultaneously maintain exposure on all the Cosmos assets that you hold, and then also on the gold, which won't lose too much value, because gold generally doesn't have a very volatile market.
Yeah, sorry, I just had issues with my sound. But yeah, thanks for explaining that. That was really, really helpful, I guess. One question that came to my mind, how do you evaluate which coins are being used as collateral? Is there some sort of like criteria list that you have, or is it potentially also something that could be up for governance in the future to vote in case there's a new asset that gains adoption? How do you evaluate that?
So at launch, we'll have a core set of commodities and a core set of collateral assets. So in the commodities, we'll start with gold, silver, and crude oil, because the price oracles are readily available for these. On the collateral side, we'll have Atom, XPRT, AKT, and I think DVPN accepted as the first four assets at launch. We will our aim as a protocol is to be decentralized and have as many different coins accepted on the collateral side, and as well have as many different assets on the C asset side. So we'll definitely be having governance proposal based whitelisting of collateral assets as well as C assets. So if the community ever wishes, let's say coffee should be a commodity that should be traded on Comdex, there could be a governance proposal for it, and then we could have coffee listed as a C asset. And if there's a governance proposal for accepting, let's say,
Chihuahua.
as collateral, then as long as enough people support it, then we can have Huawei as collateral as well. From Huawei.
Yeah, I think that would be at least very crypto native, such a proposal.
Okay.
Interesting. Yeah. So you just said something very, very important, which is another key part of a synthetic asset protocol, which are price oracles, right? Because one thing is to have some sort of like mechanism, whether it's the seniorage model with the mint and burn, or whether it's the CDP model. That's one side, but the other side is, how do you ensure that the price of this synthetic asset, of the commodity that you're representing as a token, gold, silver, and crude oil, I think you just said, how do you ensure that these prices are correct? Where do you pull the information? Where do you what's the price oracle that you guys are using?
So currently we're working with Band Protocol, which is also an IBC enabled price oracle in the Cosmos ecosystem. So for the existing C assets that we'll have, which is gold, silver, and crude oil, the prices will be coming from Band directly. For future assets, we'll have to work closely with the team in order to establish some price oracles that may not exist today. So we have ongoing dialogue with the team at Band for future oracles as well. But as of now, the existing oracles will be based off of Band protocol.
Interesting. All right. And then at what point does the CMDX token come in? Because I think you didn't mention it right now in the collateralized coins that are being used as collateral. So what's the purpose and the role of the CMDX token?
So CMDX at the onset will be used for governance. It'll be used for staking. It's the native token of the chain, so it's also going to be used for transaction fees and rewards and liquidity mining. It will be accepted as collateral. We don't want to launch with CMDX as an accepted collateral on day one, for multiple reasons. One being that when a coin like Comdex is as new as it is, there isn't enough of a record for us to sort of judge how much volatility the coin can have. So in order to maintain sort of the stability of the debt on the protocol at the onset, we'll have assets that have been in the Cosmos ecosystem for long, so that we're able to establish sort of the volatility around them, and then choose the right over collateralization rates. In any case, once governance sort of takes over, even though we'll have even parameters of CDP minting be subject to change through proposal. So the governance proposals could vote on how much collateral is required, how much over collateralization is required, and what rates can be charged for liquidations and things like that. So CMDX, yes, at the onset will not be a collateral asset. In the long run, it definitely will be. And then also, we've discussed in the past about USCX, which is a stable coin that we've long wanted to launch from Comdex itself. We're still working on different mechanisms for maintaining its stability. Part of what we're looking into maintaining the stability for USCX, which would be the stable coin, would be to have a sort of mint and burn relationship with CMDX, but a CDP based relationship with other coins maybe. So that's something we're sort of still in the process of hashing out when it comes to USCX as a use case. But for the Synthetics app, these other use cases is what the token will serve.
Yield strategies is also another very, very important thing. Everyone loves to earn yield. We're all crazy about osmosis, LPing, and staking and all these things. So what can you tell about what's cooking for potential ways to earn extra yield on top of your synthetic asset positions?
Yeah, so we'll have an exchange for all the synthetic assets that get minted on Comdex, and this exchange will follow a constant product AMM approach. So we'll have liquidity pools with, let's say, gold and CMDX, and let's say gold and silver, silver and CMDX, and things like that. So there's always ways for liquidity mining in the form of both short farming and long farming, where long farming is you provide liquidity in gold and CMDX yourself and then earn the rewards. And short farming is where you mint gold and then provide liquidity. So you're essentially having a short position on gold while also earning yield from providing liquidity of that gold in a liquidity pool. So pretty similar to anyone who's familiar with how Mirror Protocol works. A similar sort of method of earning yields from providing liquidity on both the long and short end of any synthetic asset.
Very, very interesting. Yeah. Yeah. So we covered the token, we covered the synthetic asset protocol. So I think we can go a little bit deeper on the timelines and also roadmap. Obviously, the CMDX token is already live. It's already on Osmosis, and part of the airdrop at least is already claimable. So what is the timeline and roadmap for the platform to go fully live? When can we buy synthetic gold on Comdex and provide liquidity with it?
Sure. So, in the immediate term, our focus is to integrate Cosmosm onto Comdex, onto the Comdex chain, which is something we'll be doing in the coming weeks. As soon as that completes, we're pretty close on the testnet for the Synthetics app. As a team, we're in the process of testing the app internally ourselves. So, very close to launching it out for the community to try out and play around on the testnet for the app. We will run some incentivized testnet schemes where people get incentivized for being early adopters and users of the app. We'll also have bug bounties running so that users can interact and try to help improve the app experience overall. We're also applying for security audits, so that will help launch the mainnet of the app once we clear all the security audits for the protocol. So that's sort of the immediate timelines in terms of sort of the immediate goals that we have. In terms of timelines, testnet app could be live in fingers crossed 2 to 3 weeks from now, and then mainnet launch could also be closer to end of Q1 2022. Other than that, exciting things is once we have Cosmosm integrated into the chain, the enterprise app that we have will be migrating to the Comdex chain. We'll begin development work on ShipFi as well, closer to start of Q2 2022. That way, hopefully by the time ShipFi is ready, the enterprise trade application is fully interoperable with ShipFi. So we're able to create an ecosystem where volumes that are on the enterprise trading application are able to source liquidity for financing from ShipFi through the DeFi ecosystem on Cosmos. So yeah, a lot of exciting things that we've planned up for the coming year. It's always been part of our vision to expand, into other ecosystems as well. So we want to have bridges that we build across to different ecosystems. ETH being the first, which is what we target probably in the medium term for Comdex as well. The C asset set and the collateral sets will expand as well. And then we've also been in discussions with the P-Stake team closely to integrate P-Stake with the Comdex Synthetic app. So what we want to do is enabling collateralization of staked atoms or staked assets. So let's say you're someone who's staked your atom using P-Stake and you have the STK atom. You could actually use that STK atom as collateral to mint synthetic assets, so that the collateral that you have is also earning staking yield while it sits in the vault. And then all the staking yield you earn pays down the debt that you have through the synthetic assets that you mint. So that's something we're in the talks with the P-Stake team for, and should be able to focus on later in the year as well. So yeah, I think ShipFi, synthetic application, expansion of asset sets, integration with pStake, um, migration of the enterprise app onto the Comdex chain. These are sort of the more immediate term focuses for us this year.
That sounds very, very cool. I like that P-Stake collaboration. Like, imagine you have a staked asset. So for those that are not familiar with P-Stake is a liquid staking protocol, and also on its own sovereign chain, because that's the whole ethos of Cosmos, right? That you have sovereign application-specific blockchains, all connected through IBC. And through P-Stake, which is already live, you can do that today. You can you can basically lock your atoms, and then they will be staked natively on chain, and then you will get an ERC20 token representation of that staked atom that you can then use in DeFi. And in that case, you can also use it now to provide this staked atom, which is a liquid token, as a collateral on Comdex in the future. That's super cool. And then you can issue synthetic assets, and you can use them to do more things with it. So crypto is really, really wild. There's so many things that I'm really, really excited about, especially in the synthetic asset field. What can you say moving forward from maybe an architectural standpoint and maybe organizational standpoint? Are you guys doing? I think so far you haven't. Did you raise any funds yet, or is there another kind of like public sale coming up, or anything to raise money, or are you already funded enough to go for the launch?
So when we started building our enterprise trade application in 2018, 2019, we were backed by a few, family offices who have a footing in the commodities industry already. So they were advising and investing in Comdex at the time. So we were able to build a lot of Comdex that we built in the last 2 years, bootstrapping that liquidity. And then obviously this year when we had our mainnet launch, we launched with a LBP on Osmosis, because we wanted to first have some sort of price discovery for our token, and then also have the community have access to the token before having any other VCs or whales at the cap table. Going forward now, we have plans to do a lot of things when it comes to the ecosystem itself. ShipFi is an app that will be built on the Comdex chain. We'll have USCX coming out later in the year, towards the end of the year, where it'll be the first sort of collateralized stablecoin that's IBC enabled. So in order to support a lot of our immediate security audits and other expenses of operations when it comes to things like centralized exchanges, we will be doing strategic partnerships with a few stakeholders in the ecosystem. So validators and people who can make basically any sort of strategic contributions to Comdex. We'll be working closely with such folks going forward for the next few months to create that network that's needed for the ecosystem. But for Comdex itself, next month, as a part of our token economics, we have a part of our community dev fund, which is unlocking next month. So this is something that we want to use to promote development on Cosmos, on Comdex, within the same sphere and within the same ecosystem, which is to create financing in traditional finance debt through DeFi. So that's going to play a big role as well going forward, about how we promote sort of the growth of the ecosystem as a whole, and attract even on the building side, attract more and more builders to be involved in this ecosystem.
Yeah, and I highly, highly encourage everyone listening to support you guys. Also on Twitter, Comdex Official. Play around with the app. Claim your airdrop if you're eligible for it. There's also already a tool. I think it's airdrop.comdex.one. Actually, let me put the link here right now in the chat. Claim your CMDX airdrop. Boom. And then also the Twitter link so people can follow. Dex on Twitter. Boom. Yeah, and you said validator, so Stakesito is also up and running, and thanks to you, also a good, generous delegation from you guys. We're in the top 4, which is absolutely crazy. So really, really appreciate that as well. And also, a lot of people have already texted me, "Hey, just delegated my CMDX to you guys." So thanks everyone for the delegations. I think we can do questions. There's actually a lot of questions also on Twitter. Or is there anything from your side that you want to finalize or share before we get into the AMA?
No, I think we covered pretty much everything that's there as an update from our end. I think as a project as well, we'll be releasing a detailed blog post pretty soon, which will have a lot of our roadmap plans for the coming year outlined in it. So I think that will help clarify a lot of our coming plans.
Awesome. Yeah, and we got 70 people right now watching, so please drop your questions if you have any. We'll go through some real quick. Yeah, we still have a few minutes left, so that's good. IPO Signal is asking, is regulation an issue, or is Comdex planning to go fully decentralized?
So there's multiple ways we're tackling this. When it comes to an application like the enterprise trading application or Shipify itself, we will have integrations with KYC, AML service providers, because accessing debt and accessing any real world asset on the TradFi side requires some degree of um, reporting and AML KYC responsibilities. So that's something we'll be doing on the enterprise and Shipify applications. But the synthetic application remains fully decentralized. So there any investor or any user of any Cosmos ecosystem asset should be able to access it.
Interesting. Yeah, and someone also asked me on a different note in that context, regulation, global politics, and all these things. How would this affect you if there would be, I don't know, if there would be like, for example, if you had certain commodity trading on the exchange, someone asked me, would that, if there was something going on in traditional finance in the real world, would this also affect the Comdex platform, or are you completely detached from that and purely in the crypto world?
So the synthetics application should be fully detached. The only sort of relationship that remains between the synthetics application and the traditional finance world comes from the pricing of the assets itself. So volatility in pricing will surely affect markets on both Comdex and wherever the volatility initially occurs. But I think regulation, it still remains clear of, because it's a decentralized protocol. So it's all up to the governance and the users who sort of operate the chain.
Yeah, I guess the key things are obviously, one, securing the Comdex chain and decentralizing it enough. Two, that the CDP model is working smoothly and fine, and there's no breakdown on that end. And then third, I think the price oracles are also substantial to make sure that there's no glitch or no flaw in the system. But other than that, I guess it's completely detached from everything else. Jane is asking, can you get a synthetic CMDX of your staked CMDX coins to use it as LP?
Wait, I'm going to have to read that again. Can you get a synthetic CMDX of your staked CMDX coins?
I guess it's like a liquid staking position, right? That will probably be the stakes job.
Yeah, that's correct.
Yeah. But yeah, I mean, technically you could do that, right? Through P-Stake, you can liquefy your staked CMDX, and then you can use them as collateral, as we talked through earlier. Kavasco is asking whether you use, I guess, Akash for hosting like Osmosis.
So not at the moment, but we're actually in close conversation with the AKT core team. So we are looking at multiple technical collaborations or technological collaborations with their team. So more updates on this will be coming soon.
Julia's asking, I guess, a little bit of a recap. When is this launching?
Yeah, so testnet of our application should be coming live in a couple of weeks. Mainnet closer to, I think, end of Q1 2022.
All right, Jack is saying P-Stake integration would be amazing. Yes, and it's coming. What about this? Ghazni, if someone goes short on gold and LPs on gold CMDX pair, will they have to pay funding for the short?
Correct. So yes, going short essentially means minting the minting the synthetic asset. So when you mint a synthetic asset and when you close it, at the time of closing the synthetic asset, you're charged not only the debt, but also an interest on the debt that is accrued for the time that you have held the debt for. So when you're doing a sort of a short and then LPing, the duration that you remain short for an interest is constantly accruing on your gold position. But at the same time, you're earning rewards from LPing the gold with the CMDX pair. So depending at the time and what APYs it's sort of delivering, but you could actually be earning more from providing the liquidity than having to pay in the interest. So you still end up making a net positive cash flow.
Jane is saying, missed the airdrop, but after hearing from team sounds promising and will add some staked at CMDX, which raises a question for me. What's the game plan to increase liquidity for the CMDX token? Are you considering any centralized exchange listings, which I think at this point, Osmosis listings are the new Binance listings. So what is your game plan with the CMDX liquidity and potential listings?
So, at this point, we haven't really looked into any centralized exchange listings, sort of with serious interest, at least. The way the things are going on Osmosis, I think is very satisfactory, and the pool is doing great. It's so we're very happy with the things the way they are on Osmosis, and I think in the interest of sort of remaining decentralized, it helps to be on Osmosis and be part of just be on a decentralized exchange for the time being. So yeah, no immediate plans for any centralized exchange listings in the immediate term.
Awesome. Let's see, what else do we have? Gustavo is asking what percentage of total coins will be airdropped or given away. Maybe you can explain a little bit more about the general tokenomics on the CMDX token.
Oh yeah, sure. So we have the token economics split broadly into 5 categories. So 25% of the token goes towards liquidity mining rewards, which will come in handy when it comes to providing incentives for LPs on Osmosis, but also LPs of synthetic asset pairs with CMDX on the DEX. We have 25% going towards treasury and foundation, 25% towards team and advisors. Then we have 12.5% of our allocation that was airdropped to Osmo, Luna, XPRT, and Atom communities, both stakers and non-stakers in different proportions. And 12.5% of CMDX is allocated for, as I said, the Community Development Fund. So this will be typically used towards supporting activities that help the community grow, whether it's in the form of supporting builders who want to build applications, or whether it's in the form of supporting folks like yourself who want to organize events where there's more information being or more awareness being created about the ecosystem or about the applications of the project. So that's where I think this allocation will come in handy. And then for the airdrop as well, the reason we chose Atom again is because it's sort of been home to us as an ecosystem over the last 2 or 3 years. Persistence as well, because they've been very supportive of us in our early journey, and still broadly part of the persistence ecosystem. So it obviously was something we did. Luna also, because now, at least at the time that we announced the airdrop, Luna just had the Columbus 5 proposal passed, and then they became IBC enabled. So it made sense to sort of to airdrop to the Luna community to be able to tap into their community as well as they come into the Cosmos ecosystem. And then Osmosis, because that's a DEX where we'll be listed, and then it helps to get yourself familiarized with the new asset when people already know about Osmosis from all the other assets they've been helping for.
Awesome. Let's take some questions from Twitter. Cosmonaut Jeff Nova asked what your favorite book is and why. Very different question. So
yeah, I have a couple of books. I think one is The Return of Depression Economics by Paul Krugman, because I'm a big geek when it comes to the 2008 crisis. I love reading about it and everything that caused it to happen. Another book I really like is a book called New Ideas from Dead Economists. I can't remember who the writer is, but it's one of the most interesting economics related books I've read till now.
Awesome. Well, there's a lot of questions that are also repeating. When platform, when airdrop, when web app. Let's see what else we have. If there's any other common questions that come to your mind and also feel free to address that. Otherwise, I'll look for more if I find something here. I mean, yeah, we talked about this very early on, but Bitberry is asking the two questions actually. So one would be future incentives for the CMDX token holders and its utility, as well as relationships to XPRT. Maybe you can expand a little bit on that.
Yep. So speaking about the CMDX token utility, as I said, it'll be used for governance. It'll play a role in having liquidity mining rewards in CMDX. The transaction fees of the network will be in CMDX, and then eventually it'll also have either a collateral or algorithmic sort of relationship with different synthetic assets, depending on what they are. Uh, but also in the long run, when we speak about, we've sort of mentioned the term Comdex ecosystem a few times. What the ecosystem or what we're really trying to build when we say Comdex ecosystem is just multiple solutions that cater to debt on the traditional finance side and are able to access liquidity from DeFi side, and then create that bridge for this liquidity between DeFi and traditional finance, or CeFi as we like to call it. So in terms of the token economics in the long run as well, we'll have ShipFi coming out, which will have its own token. Eventually, when other applications sort of they all come out and launch on the Comdex chain using the Comdex modules, what they'll all have is relationships with the CMDX token, where obviously we assume there'll be airdrops for all of these tokens going back to CMDX holders, LPs, and stakers. All of these tokens will have trading pairs with CMDX. So we expect that the demand for CMDX goes up when new pools get created with CMDX pairs against them. And then also, depending on the kind of application there might be other uses that other, not just CMDX, but other Cosmos ecosystem assets can have in those applications. So there are multiple ways the CMDX apps can play a role in the ecosystem as we go forward. But a large part of it will come truly as the ecosystem grows and more and more new applications build, because that's where there'll be a demand for CMDX holders to provide liquidity in CMDX pools, to stake CMDX so that they're able to participate in governance, to also earn rewards or airdrops from any dApps that launch in the ecosystem that are, usually doing airdrops to like Cosmos or, even Comdex holders and stakers.
Awesome. Yeah, I think we can slowly wrap it up. We've got Dub Digital in the house. So hyped for this project. Big shout out to Dub. Crypto Secret Circle is also here. Can't wait to use the synthetic asset platform. What else do we have? Prometheus is asking if you borrow gold, how's this gold covered? Comdex buying gold in the background. I can answer that. No, it's you guys are not buying gold in the background. The price is just tracked through oracles, and then it's collateralized through various cryptocurrencies, right? Like you mentioned, Atom, DVPN, Akash, and what was the fourth one? I think you mentioned fourth, right? For XPRT, right? Yeah. So that's kind of like the CDP model that we talked about earlier. And if you just tune in now, scroll back. Later, I will also provide timestamps so you can navigate through the video. But yeah, I think we can wrap it up. Do you have any other final words? Maybe for some people that listen to this now and heard about you for the first time, they think, hey, this is a cool idea. I want to get involved. What would be the first starting point for them?
I think the best starting point is the website. So comdex.one, comdex.one. From the website, you should be able to easily get an idea of what the project is, and then navigate to, find yourself in the community chat or in the Discord, find our GitHub, find our documentation, our white paper. Through the community chat and Discord, you should be able to get in touch with, any of the team members. All of us are happy to help you out and help you understand the project and figure out ways if you guys want to get involved and contribute as well. When it comes to the community on Telegram itself, I think we have a very vibrant community on the Telegram community chat. So that's another great space to find out more information, because there's always, if not team members, there's always members of the community who are always there to answer questions. So yeah, I think these are the best places to go to get started about Comdex.
Awesome, yeah, and follow these guys also on Twitter, Comdex Official. Thank you, Siddharth, for coming on. This was really cool. I hope we learned a lot. I learned a lot. So, yeah, and everyone watching, feel free to share this video with your friends to learn more about synthetic asset protocols on top of Cosmos. Thanks for coming on. We'll keep in touch and wish you guys all the best.
Thanks for having me here. Take care.